But shifting focus to the primary markets then, Deepak Goel, chairperson and managing director of the company. In fact, we also have Laser Power and Infra, where the price band has been fixed at about 203 to 214 rupees per share. Remember, it's a 740 crore IPO. The issue will open on the 9th of July and it will close on 13th of July with an 11% grey market premium indicating strong investor interest. The company plans to use most of the fresh issue proceeds to repay its debt and strengthen its balance sheet position. Sajid caught up with Deepak Goel, CMD of the company, to understand their growth roadmap. Listen into what he had to say.
So I would like to take this opportunity to introduce my company. We are a cable and conductor manufacturing company which has been doing this since many decades now. We have almost more than 3 decades of experience in manufacturing of cables. Apart from this, we are also having very strong experience of erection. Our EPC arm is having experience of doing very challenging jobs, and the company over the years has grown well. In last 3 years, the company's revenue has grown by almost 38%, and going forward, the company is having a lot of strength from the plans that the Indian government has towards the power sector. If you have gone through the national electricity policy, it shows a great vision of the Indian government towards the improvement of the transmission and distribution corridor. There, if you see, we are planning to generate a lot of power due to the energy security that our country needs. When we go forward trying to improve our transmission and distribution infrastructure, there are a lot of bottlenecks which the country is already facing. Laser power is present in that sector or in that position to serve this bottleneck of transmission and distribution infrastructure constraints. Now, if I have to give you a little bit of insight into our product side, we do manufacturing of cables and conductors, but also specialized conductors which are of new age. Those are conductors which are able to increase the current carrying capacity of current transmission corridors by 2x or 3x. So this is a specialized technology and a specialized product which we are bringing into India with a tie-up from a conductor manufacturer of US called TS Conductors. So we are bringing that technology into India, which is a very relevant technology for our country, and it is going to strengthen the country's transmission infrastructure in times to come.
Mr. Goel, if you can give us a sense of the kind of capacity that you have, because T&D investments and T&D capex has been will be very high over the next 10 years or so because of the kind of additions that we are happening, especially with respect to renewables and others coming on stream. What kind of capacity you have there, and how much of additional capex have you built in?
Okay. So we are having 3 manufacturing units in West Bengal, and that is spread over 40 acres of land space, out of which again one significant point is that around 16 acres of land is still lying idle. So our current manufacturing capacity has already increased from 54,000 tons to 84,000 tons in last 3 years. That is a 38% increase in our manufacturing capacity, and going forward we have enough headroom to increase our capacity as and when required, because we still have around 16 acres of land unutilized to capture the growth of India's transmission and distribution story that is going to pan out over the next few years.
You are raising these funds to primarily reduce your debt by 490 odd crores. What is the kind of debt position that you have at this point in time?
Yeah. So the borrowings that we have is at around 800 crores, and the fund raised will be used for repayment of the borrowings that we have. That is going to bring in a lot of flow into the company for the years to come, for the growth that we are planning. Apart from that, the financial structure of the company is also going to improve, where the company's balance sheets will become much lighter and the company will be re-rated. And for that, our cost of funding will also reduce, which will also be visible in the balance sheets in years to come. So the cost of company's interest will also reduce substantially with this cash flow coming in.
The sense of your exposure to is primarily to central and state electricity boards, which is there. What is the kind of payment schedule that you have with them, and what is the kind of the credit period that you provide them?
We've been working with the government sector since almost 30 decades now. We understand the payment cycle, and we are actually taking our exposures accordingly. Whenever the need is there for us to accelerate into one particular customer, we accelerate accordingly. So we look at since our experience is almost 30 years old, we do understand where we need to put our accelerator and where we need to put our brakes. So the working capital cycle over the years have been well managed, and going forward it will still remain manageable, and we do not see any sort of stress happening in future. The growth plans of the company will also remain intact, and with the proceeds of the IPO coming in, the cash flows will even improve further for the growth that needs to be captured in the times to come.
Give us a sense of your customer profile as well, because top 10 accounts for nearly 72% of your revenues. The top customer accounts for nearly 25% of your revenues. So who is the top customer for you?
The top 10 customers would essentially constitute government sector utilities or public sector utilities, state electricity boards, and usually the spend on transmission and distribution infrastructure in the company comes from the government side. So this is not a private sector side business, so it's a government sector side business where the customers are going to remain almost constant during the period of our execution. So our top 10 customers, though in past 3 years, have constantly changed, but going forward, these customers do have a lot of expansion plans that they are going to do, because you may have read in the transmission and distribution space, or in the renewable space, or in the space of data centers, there is going to be a lot of spend, so our customers are going to switch accordingly. We also do operate in the railway segment. We have our substantial amount of our revenue coming in from the railway side, and railway is also planning a lot of expansion in eastern India. So that is also one sector where we are going to benefit from the revenue side.